Welcome back. You're watching Market IQ. As promised, we have Shiv Diwan, Managing Director and Head Institutional Equities Nuvama Capital Markets, joining us on the show. Welcome, sir. Thank you for taking the time out and speaking to us.
Good morning, Smriti, and thanks so much for having me on the show.
Okay, so let's start off with the conference that you're holding on, and tell us a little bit about what the conference is about and what kind of response you're getting from corporates as well. What kind of participation rather are from the corporates?
So, I mean, we're doing this, this is our flagship India event that we do every year in February. This is the 19th year in running, and this time the theme of the conference is now more than ever. We totally believe that, this is the best time to be invested in India and to sort of stay invested for the long term, because it's obviously a very interesting market. And our belief is that for the next few years, with the kind of political stability, macro stability that you're seeing, it offers a fantastic investment, an investment opportunity. So we've got this conference which is set up over 3 days. We have about 190 odd companies that are participating. We have about 700 clients that have registered for the conference. We're currently, we've just started off and it's going to be on till about Wednesday evening. There's been some fantastic participation from foreign institutional clients as well. So it promises to be a very, very good event.
Spoke about 2025 and some participation from foreign institutions as well. So I think you're the right person to tell us about the pulse of these institutions and how they're feeling about India and the growth in India for the longer term. Tell us a little bit about that.
So interestingly, this time around, at least I get the feeling that far more people are open to investing into India than probably the situation was 3-4 years ago. India's relative positioning in world markets has improved meaningfully over the last 3 years, and that's showing up. What also helps is that other emerging markets haven't been as exciting of an opportunity as India has been. So that also obviously doubles up the quotient for India. I think the experience for a lot of the investors over the last few years has also been very, very good, and which has shown up in the way returns have emerged for people who have stayed invested. I think the foreign institutional investors definitely believe that India is a growth story that's here to stay, and like I said earlier, coupled with the political stability, the macro backdrop, the fact that flows remain strong even domestically, that has only added to the excitement that India is.
Right.
We have about 60-70 odd FIs that have come into the conference. I'm yet to meet all of them, but the few that I've met are definitely looking excited about at least the next 2-3 years, and I believe the opportunity is definitely there.
Right. Should break this down a little bit more for us now. You're talking to these institutions and these foreign institutions as well. What kind of sectors or themes that you as a group, Nuvama Group, is constructive on, and what kind of investment flows are you seeing in particular sectors? Especially you talked about how well India is placed in the global markets as well.
So, I think last year was all about, real estate and autos, and I think that theme picked up and played out very well. Real estate was coming out of an 8-year lull, and I believe last year was the first big year for them. I think that as a theme continues because there is enough and more demand on the real estate side, and obviously all ancillary sectors will also benefit because of the kind of real estate boom that you're seeing. So that's definitely a sector that's, that's a flavor for now and should continue to be for the next few years. Autos had a re-rating moment last year, and now you will probably see them move in line with the markets as we go along. I think the two sectors that I would believe are starting to look very interesting, and probably this will be the year for those two. One is IT. I think IT is the theme that is likely to play out as a lot of the order books that these companies have all been talking about that will come into fruition, and the benefits of which will start showing up in the next few quarters' results. And the other sector that I think has been in has taken a little bit of a beating over the last few years after a very stellar 2020 or 2019-20 was chemicals. I think the benefits of all the capex that they've incurred over the last 2-3 years should start start to yield results. So yeah, I think that's another sector that one should watch out for this year. Apart from that, I think obviously you can't have a conversation without talking about private banks. I do believe that they are also in a situation where things should or are likely to get better from here, with interest rates having peaked and things looking up for the entire space. I believe that that's another sector that you can't ignore for too long.
Right, absolutely. Thank you so much, Shiv, for talking to us and giving us your perspective on how these themes are going to play out in the next couple of years. Well, now that was Shiv Diwan of Nuvama Capital talking about the market and the themes that are going to play out in the longer term. But let's get a little stock specific.